Mitigation. You heard me say mitigating. What's mitigation? Mitigation is the reduction of risk. It's reduction of risk by the algorithm on behalf of smart mind. That's it. That's mitigation, my brother. Okay, here's we see that the market was bearish here, did whatever, and then it mitigated something. It mitigated a PDRA. I forgot to label here. It mitigated a PDRA, or maybe it swept some low, which is part of a PDRA. No, yeah, it swept some low. After it swept some low, it broke bullish. The moment when it broke bullish, we want to enter at this PDRA there. Like in this example, this is like this here. So we want to see an accumulation here before we hit our entry point. The moment we see this accumulation here, we become happy. It can be the agent range or whatever. We become happy, and the moment we see that break, we see that as an breaking that accumulation to the downside, hitting our PDRA or our whatever demand zone. We see that as a manipulation to go and trigger orders of those who are willing to sell, so that money can buy those sell orders to go and so that it can buy the market while people are willing to sell that market. So we'll buy that market and go forward. This selling of the market, the moment when the algorithm started to sell, it used money, or it accumulated some sell orders to manipulate others to come and sell here. The moment when they sold, it immediately bought price or the market to go bullish without, and it left some sell orders unclosed, which it has to come back to mitigate those, to reduce the risk by taking those entries at break even or at a zero or at a profit, whatever, so that it can continue with the right trend. So this was just a stop hand, or was a Judas swing, trapping other traders to leave them there to continue up and mitigate our things and leave them there. And when we come there mitigating, some others will think that we are coming there to continue there. They will enter again. They will leave them because we are like that. No, because the algorithm is like that. When I say we are like that, because I am the machine, I am the algorithm. So I am classifying myself within that. So yeah, accumulation, where the algorithm accumulates pending orders of smart money or central banks or clearing houses to activate those orders into a running market order. Central banks or clearing houses. Clearing houses are part of central banks, and clearing houses receive liquidity or market pending orders from big institutions. So if in the market there's $7 trillion injected, if $5 trillion is a buy, and that buy orders are accumulated here, they are going to try to look for $5 trillion to what can I say, to complete that transaction. Because if there are $5 trillion buyers, we need $5 trillion sellers, you understand? But at the moment we have two, because eventually all of it is seven. $5 trillion of buying, $2 trillion of selling. So eventually you're going to go drop down to take that $2 trillion and finish with it, and then continue doing the other things in the forward to complete the $3 trillion that's left. And hence after that completion, we are done with that transaction. The clearing houses are done with the delivery of price. We have done the taking profit, whatever is happening. Those who betted $2 trillion, I'm sorry, we charge your money. It's the way that has to be done, because when there's a seller, there has to be a buyer. So I know if you are part of those doing whatever, it's not the buying and selling pressure, but the algorithm is doing the payments. It's not buying and selling, many people buying. Good, we can have a lot of people buying. Good, we can have a lot of traders buying, but that money wouldn't equal to the buying of the small people, which are the smart mind, the central banks. Good, your retail buying won't subdue the small people, the small group of people who are rich. We are small, but you are mean with small capital. But let's move. Accumulation, manipulation to activate those pending sales order, stop orders, or get traders, big institutions into getting into the market, and then same thing that we are making it and shit. Displacement leg. That's our displacement leg. Dealing range high, dealing range low, whatever. mitigated below the 50% of the whatever mitigation. This is where the algorithm mitigates all the sell orders it did for the purpose of activating pending orders of some big institutions to inject or introduce sell side liquidity in the market to buy it to go long or bullish. This mitigation is for the purpose of losing the sell orders or at break even. The reason why I don't like reading is I don't know what I said there, but I'm the one who wrote this because I understand. Let me explain. Yeah, we mitigated that level because the algo, like I told you, it spent whatever money to go below to manipulate others, and it bought immediately and mitigated what it left there. So what the algo is doing is hedging and scaling in and scaling out. That's what my mentor said. ICT, whatever. And then we have our delivery of price to the upper side, and then at the top there, before whatever, we do our distribution. We are distributing that by orders to those who are willing to buy those orders, and so we are distributing that to those who are willing to buy, and then we move out the algo, the smart money moves out, and then you see after the smart money are done with that trade, then you see the market is starting to consolidate. When they are coming back, you see prices now going going full price. But since now it's December, there are holidays, they are not that active. Yes, there's liquidity running because money is running, but it's not being bought and sold too much. There's less and less, market orders that were meant to happen are happening, but it's not that busy in this December. So let's go to an example with the Euro USD and other shit, and we'll continue. Okay, I'm going to show an example using the Euro USD, and we're going to firstly identify the structure, the market structure. How was the market structure going? Well, we can see that the market structure was bearish. We meet lower lows, higher lows, lower lows, higher lows, whatever, higher lows, lower lows. We're currently here. Okay. And currently we can see that we had a break of structure to the bearish side in the weekly time frame currently. From this low, like that. Let me delete this shit here. Yeah, we had a break of structure there, and hence once we saw our break of structure, we're going to label this as a weekly break of structure. So do that for yourself. I'm not going to do that. I am a very quick nigga, not in bed though. Okay, after identifying our break of structure and seeing our displacement neck has broke structure and closed price, it broke structure here and it closed price. It didn't break structure with a wick like this. Let me show you. It didn't break the structure like this with wicks. That's not a break of structure, my brother. That's a sweep of liquidity. Breaks of structure is this, my brother, my sister. This is what I call a break of structure. Full body close, full body naked close fade. That's what I call a break of structure. But yeah, we had our break of structure there, then went bearish and broke structure to the upside. The moment we had our break of structure to the upside, that's when we identified our dealing range low, which is going to be our weak low. Why is it weak? Because it's our target. This things is never going to protect them. This also our targets. This things is a protected high. Why? Because it's protected by this fair value gap, by this demand zone, by this order block, by this mitigation block, by this breaker block. Oh, fate is protected, my guy. Fair value gap, demand zone. Oh, sorry guys, supply zone, whatever. And we went up to mitigate some PDRA here. PDRA that I can immediately see is this. It's an order block. We didn't mitigate our supply zone. wish we could, because I'm going to teach you with the supply zone, and then we can move to other PDRAs in the future. But I want you guys to take baby steps for somebody to take this 3-box strategy and make it his own with his supply and demand zones, and others will learn other things that they will interest them in the future that I will recover and cover and cover. Okay, continuation. As I told you guys, this is our weekly break of structure, and you know that this weekly break of structure internally and the monthly is the internal structure of the monthly. Why do we say that is the internal structure of the monthly? This is what we see. The monthly is bullish. Okay, what this broker doesn't want to give us more data. It's acting like a baby girl. Is yashi. Okay, we had our break of structure there internal. So that internal break of structure in the weekly, it's a busy day. It's a busy week. We had internal breaks of structure in there, and what we realized, the internally of the weekly we had this, and we know that the internal of the weekly is the daily, and hence we are going to realize that from that high to that low, that was the daily dealing range. Let's see the magic. Oh my god, oh my god. Whatever, 25. Yeah, so super late. This is it. You see, this is the dealing range. This is the breakout structure of the daily. We went up and mitigated above the 50% of that dealing range. That's our premium levels. At our premium prices, we sold with our smart money here at this order block, rejection block, supply zone, whatever you want to call it, my brother. We mitigated there, and internally we broke structure, just like I told you. The internally of the deal is the what? Is the H4 breakout structure. Oh, in the daily, we had our breakout structure to the upside, showing an interest of the market retracing back to our premium levels, to mitigate our premium levels, to go back to our discount levels, eventually to target our week low. Right? I think that's right. Well, with that said, internally, since after this break, we identified our week low and the full dealing range, so that we can identify our equilibrium nicely and our PDRs that will that will resist, form a resistance so that price can fall. We had our breaks there to the downside, and not going to realize that that break was an H4 break of whatever to the downside. Okay. Was it an H4 break? Okay, yeah, it was an H4 break. It was an H4 break. This was a dealing range high. This was a dealing range low. So expecting price to go and mitigate our dealing range high. And we had our internal breaks there. That internal break, we are thinking that it is to accommodate for price to go up and mitigate our premium levels. That's what we are thinking. But I'll do a full market breakdown in the future video. Yeah. So that will be this is 50% of our equilibrium level, this level. So we want to mitigate above there and fall. So falling down in the 15-minute, you can see in the 15-minute we might be bullish, or in the bullish dealing range. What the fuck is happening? So in the 15-minute, we have our bullish dealing range here. This is the break of structure in the 15-minute. Break of structure in the 15-minute, and yeah, this is the high, this is the low, weak high, protected low. Sure. I'll explain. I'll give more examples in the next videos, which are coming soon. Thank you guys for watching this video. Goodbye. Thanks guys for watching. Whatever.